Welcome to the first episode of
Align,
a podcast that aligns with our interests. I'm your co-host, Allison.
and I'm your other co-host, Gina Huang. Before we start, can I just say, I'm so hungry. I'm so excited to eat my Trader Joe's Mandarin Orange Chicken. I mean, just saying, the second we finish this, I'm gonna be eating something.
Alright, calm down. I'm also excited to eat the food that is. You know, sharing is caring, right?
Okay.
Did you know that it's gotten a lot more expensive lately? You must be really hungry if you bought that.
Yeah, I actually was. You know, I was actually curious about how much my Mandarin Orange Chicken got, and it went from $4.99 in 2022 to $5.49 in 2026. Isn't that crazy?
Well, it's only 50 cents. What's the big deal?
Alright, you can give me the 50 cents then. Anyways, the price of goods going up is actually called inflation. So how do I get my Mandarin Orange Chicken to go down? Oh,
Well, I actually know. It's something called the Federal Reserve. It causes prices to go down.
wait, what's the Federal Reserve? I just thought Trader Joe's hated people who like Mandarin Orange Chicken.
Well, the Federal Reserve is the central bank of the United States.
I've never really heard about that. What do they do?
They basically ensure that the U.S. financial system and economy is stable and is not in deep recession or high inflation.
Oh.
Well, let's get into it. But first, let's cook our Mandarin Orange Chicken.
Oh yeah.
Look at our chicken.
Yeah.
Yum, yum.
And there you have it. Our Mandarin Orange Chicken, and of course, some rice.
To the topic of today, the macroeconomics of it all. So the Federal Reserve is the central bank of the United States and is used to promote stability in the United States financial system and economy. So why does it exist? Well, it started from the panic of 1907, and everything that happened after is history. Congress established the Federal Reserve in 1913 before the U.S. lacked a central monetary authority. So it localized bank failures and had a rippling effect on the economy as a whole. Key tools of the Federal Reserve are monetary policy, interest on reserve balances, discount rate, open market operations, and reserve requirements.
Wait, I think I know one of them. It's the interest on reserve balances. I heard in macro class that the interest on reserve balances is the interest rate that the Federal Reserve pays banks on money that they hold in their reserve accounts. So basically it keeps money in the Federal Reserve, so it's an essentially risk-free for banks that generally don't want to lend their money to private institutions. Anyways, this increases in interest on reserve balances, which combats inflation by encouraging banks to hold onto their reserves rather than lending them all out to consumers like us.
On the topic of interest rates, a discount rate is an interest rate a central bank charges commercial banks for short-term loans, raising discount prices combined with inflation because it makes borrowing money more expensive for banks.
Oh, wait, it's suddenly all coming back to me. The Federal Reserve also works with open market operations, right?
Yeah.
Open market operations is buy, sell these securities, these bonds in the open market through the Federal Reserve. So, for example, if the Federal Reserve buys bonds from commercial banks, they increase the money supply, which increases the bank's reserves and also lowers short-term interest rates.
Talking about open market operations reminds me of reserve requirements. Regulations that set the minimum amount of cash and liquid assets a commercial bank must hold in its vaults or at the central bank. Increasing reserve requirements reduces the money supply and slows down inflation.
Oh, so basically commercial banks are different from the Federal Reserve, right?
Exactly.
Oh, that's why. So that's why you said that the Federal Reserve was like the big bank of the United States.
Did I say that?
Yes!
The Federal Reserve monetary policies like interest on reserve balances, discount rates, open market operations, they don't directly regulate supermarkets. Instead, they shape the broader economy, influencing money supply, borrowing costs, and consumer spending. And that's why prices in supermarkets like from our Mandarin Orange Chicken from Trader Joe's has different prices and demands and just throughout the years.
Oh, so the Federal Reserve controls things like the interest rate, the money supply, but they don't directly control, oh, this supermarket has to be this price, that supermarket has to be that price. Yeah, that's not making sense to me. So how exactly do these tools affect supermarkets? I mean, they're so broad in scale. How do the big bank come and help, kind of like control our economy?
Well, let's look at an example. The interest on reserve balances. As we discussed earlier, the federal banks pay interest on funds held in reserve at the central bank. Well, how does this affect supermarkets? A higher interest on reserve balances encourages banks to keep money safely at the Federal Reserve rather than lending it out. This raises general borrowing costs for businesses, making it more expensive for grocery chains to finance store expansions or increase their inventory.
And for the discount rate, I'm pretty sure it's because since we talked about the discount rate being the interest rate the Fed charges commercial banks for these short-term emergency loans, the impact that it has on these these supermarkets locally is that a lower discount rate makes credit cheaper, which incentivizes these banks to lend more to consumers and businesses. People like us, we are the consumers. So this can increase disposable income for shoppers, but if demand outpaces the supply, so if the consumers want more than there is enough orange chicken for, it can lead to higher grocery prices due to inflation. So basically it means too many people want orange chicken!
No! What are we gonna do now?
I'm gonna buy up the entirety of the orange chicken stock so I will never run out. This was delicious, and this was the first episode of the
Align podcast,
where we
discuss things that align with our interests.
thank you.
Hope you guys enjoy.
Bye.
Buy some orange chicken.
Bye.